Right. So here we go. That very nice. It's been a view. All right. So um, so just want to go through a quick rundown of what happened in the markets this past week. All right. So the day started from Friday, Thursday, Wednesday, Tuesday, Monday. Right. So the week started from around this area. So practically we would remember that we are coming from, let me take this off, sorry. Coming from a weekly resistance here, and then other levels of interest would be this weekly support right here, that weekly support, and then this weekly gap level. All right, so on the weekly chart, this would be, or those would have been your area of interest. So anytime price comes into these areas, you want to be buying. All right, so this was Monday. We opened very bearish, and then we tapped into that gap area and we closed bullish. So that was a sign that this area is a very, very strong area. All right. So then the following day, Wednesday, or Tuesday, on Tuesday it was pretty much consolidating. But on Thursday, on other brokers, there was a reaction here. Right? See this? The price tapped this on Wednesday. So on Thursday, what did we do? Came, rated that high, took a bit above that high, and then dropped lower. And for that drop, I mentioned earlier, we took a major daily liquidity area right here, which is responsible for why we closed bullish for the week. Okay. And then eventually, if you check where we are right now for the week, it's still a weekly resistance level, right? Just this level. So the next week can start of interesting, we can have something like this, and it will just be very, very much interesting too. Because let's see what unfolds for the week. So price started there, right? Tapped, dropped, tapped this weekly gap level I mentioned earlier, and then we had some buy momentum. On Thursday, we rated this high. I was CPI. That was a trade I called. Rated this high, and then we came to take the daily liquidity. And after that, we started to bounce up. So what are the important things that we could have noted coming into this week? So coming into the week, this was the prior week. You'd have noticed this. There was a liquidity grab here from NFP last week, last Friday's NFP. And importantly, this is an engulfing fill, which is the last engulfing fill before the break of this level, right? Last engulfing fill for the break of that level. So we're going to mark it this way. And according to, I don't know, many people here, if you've watched King Sofan's videos, you're supposed to go to the 30 minutes chart to find the entry, right? So on the 30 minutes chart, your good area for entry would have been this zone, right? We came, I formed this bullish engulfing. We had the breakout. We had the breakout here. This is a breakout structure. So we had the breakout, and then price came back to the HNS level, this HNS level, right? All right, tapped into it brilliantly, and stop will be above this level. So you have entered this trade, this sell from here, then what would you write it to? Yeah, of course. This is an important level. right here. There's a daily gap level that has not been tapped. And again, the body of the candle closed below this area, which is a sign that we could still be bullish, sorry, bearish rather. A good sign that we could still be very, very bearish. So price came and then tapped into it, tapped into that gap level, came up to rate this high. Right, this video is going to be pretty much vague, but yeah, you can pick one or two things here and there. Okay, so the important thing I want to point out is that there are quite a number of reasons the previous week why you could have lost a number of trades. And one of those reasons is, or one of those reasons include you not having or you not knowing how to confirm your levels. So for MSNR, you must always wait for the closing price. Always wait for the closing price. The secret is in the closing price, right? So if you're not waiting for the closing price, you're doing yourself a great disservice. Let me show you something. Now, see this, for example, this is still the 30 minutes chart. So in 30 minutes chart, you would have been expecting price to come to this level, right? Come to this SNR level to continue the buys, right? See, expecting price to come here to continue, but price didn't come to this level until this day. This was 8th of January, it was 10th of January, right? So like 2 days lapse, but price continued bullish. So how would you have actually entertained that area? The interesting thing is that you must look for whatever validates your level. And one of the things that validated this buy is this gap of liquidity. So we had a gap of liquidity, or price came, took liquidity into a daily gap level. Sorry, in my head is just daily. Sorry, into a 30 minutes gap level. I remember that 30 minutes gap level or gap levels generally are hidden engulfing. So there's an hidden base or hidden engulfing here. And what validated it was this gap of liquidity. All right, we had this gap of liquidity, and at the same time we had a rejection. So take gap liquidity and then a solid rejection, and then we broke this area. So immediately we broke this area, your limits will be here, and your target again would be this H4 area, this H4 engulfing or engulfing field rather, the last engulfing field that broke this low. All right. So must always wait for validation. Your levels must be well validated before you actually take trades. So the same thing here, right? At this zone, when price came to this H4 level, here we tapped and then we rejected, right? That's a tap and then there was a rejection. I remember that that was not the first time price is coming into this box or into this engulfing. Price came here, rejected and came again. And then finally we had this. So this was more like a gap of liquidity. And then after that gap of liquidity, we saw an engulfing forming. There's an engulfing right here formed and got broken, right? So you have your chance to sell. So you could sell from this HNS, like I mentioned, you could sell from this resistance level, like I mentioned, and then there were a couple of trend lines that would have confirmed your entry at the zone. All right. So, and you must also remember that the moment price did not tap the zone on the 8th of January, came on the night, did not tap, right? On the night, see, price did not tap. And then on the 10th, came to tap. That tells you there's going to be a big move up, actually. Why? Because this level, and this level now becomes liquidity areas for price to seek. The price will come and seek these liquidity levels. Price will come seek those levels out. Why? Because you can only validate your SNR levels by liquidity, using liquidity. And then SNR traders call this a miss. So this is a miss here. This is a miss. This is a miss. So a miss validates your SNR levels. So if you don't know how to watch out for misses, not watch out for a miss, you're actually going to be losing real big in the market, all right? You're going to be losing real big in the market. So you must always know how to confirm your level. Okay. So price also came, then use this engulfing. So we tapped, use the engulfing, and then we dropped. All right. So someone will ask me, so where's the miss here? Where's the miss? Where's the miss? All right. So for example, if you have this level right here, you notice how that this was the first time price came to this one, came into it, and then we had this slanty up, slanty move actually. which I would consider a miss. Actually, I'll consider that as a miss. And then at the same time, I'll consider this candle here as a miss for this re-entry. So price came, dropped, came tap into this level, this hidden base here, just a little bit, and then broke that area and started falling down. All right, so you must always validate your entries. Your SNR levels must be validated with a miss. There's no miss, there's no trade. All right. And then you must always remember that you only need to validate lower time frame SNR levels. 1 hour, M30, M15, M5. For monthly, weekly, and daily, there's no need for a miss. There's no need for a miss. You just want the price to tap into your level either once or twice. The level, the area is still validated. But for lower time frames, a miss would always validate your entries. See this now. See this, for example. Another good example. See this. We had this rejection, right? Then we had this guy form. This guy right here is a miss. And then we come, rated the low, right? Validated this level. Rated the low and then we close the bullish. So what do you want to expect me to do? Rated the low, we close bullish. I will load up this area. Load it up, man. Need to load up with a lot of orders, right? Need to load it up with a lot of orders. So just from around here, load it up and stops. And then we're going to target this resistance zone, this area. So say that's good money. Why? Found my level and I've confirmed it. That's how to confirm your. So you must always look for a image. Always look for it. Always find it. All right. Always look for it. Always find it. And in the same light is what we see here, right? So price came into this engulfing H4 engulfing first, dropped, came back again, tapped. But this time around, we did not take this eye out, right? So now we come to this level, and then we took out the I. There was CPI. CPI took out this I. What do you expect? Immediately CPI took out this I, you would expect it to take out the low that formed for this I. And where is the low that formed for this I? This low. So what did price do? Price came, rated this low, and rating this low now coincides with this daily liquidity level I told you about. So this daily liquidity level right here becomes a strong point. Again, validate your SNR. So how would you have entered? Interestingly, all right? So after we took this out, easy peasy, wait for an engulfing to form, right? Is it 30 minutes engulfing that formed? Say, I would have entered, I would have entered. No, you definitely would not have entered. So before this 30 minutes engulfing formed, we had this engulfing right here. This is an engulfing field. This is an engulfing field, right? This is an engulfing field. So we broke through, and then we broke. Immediately we had this breakout. What will you do? You load your level, right? You load your level. You might miss the buy here, if you're a beginner. Yeah. So you load your level, and then you can enter here. Why would you enter here? Because this coincides with an 30 minutes hidden base and a gap level. So you enter and put your stop where you should be. And what will be your targets? Again, your target is going to be on the daily level. Remember, you're buying from here. You're going to be targeting number one, this area price didn't come to. So let me take that off. Price didn't come here, right? So this will be your first TP. And the second TP is going to be this level. All right. We've only tapped it once. That does not invalidate the level. Okay. Only tap that level once. So we can still daily, weekly, monthly, we can use the same level 2 times as long as price does not close above it. So this is a daily reject daily right here. So another reason why you can get to lose a trade trading MSNR is when you are focusing on the lower time frames. See, the interesting thing about trading is that there is no need to chase the rats. Don't chase rats. You have to set your trap for the big elephants. And how do you do that? You have to focus on higher time frames. So the H1 and H4, they are your setup time frames, your control time frames. Those are where you want to focus on, such that when price gets to important areas on those time frames, you want to look for entry. Let me show you something that happened in the past week. All right. So in the past week, by just focusing on the H1 and M1, and sorry, H1 and H4, right? See this gap level here, price tapped, right? on the H1, on the H4 rather. So when price starts on the H1, I mentioned a concept called the draw transposition, where you go 2 time frames below, 2 time frames below. So 2 time frames below the H4 is the M30. You go to the M30, you find your entry. What's your entry? You look for a breakout. So we tapped, look for a breakout, retracement, and then you enter. Breakout, retracement, and then you enter. All right. Breakout, retracement, and then enter. The same thing with the H1 level. All right. On the H1, after CPI, how would you have entertained this good re-entry? All right. We tapped into this level. We broke out, right? That was a breakout. Where's the retracement? Thank you. This is the retracement. You have entered yourself from here. So you don't need to go to the 1 minute charts and, oh, I need the 1 minute entry. I need a sniper entry. Nah, you don't need a sniper entry actually. What you need is following the H1. You need to catch the big elephant. All right? You need to catch the big elephant. The OGs in MSNR, you see them catching trades like this, and then they hold it for long. So yeah, enter here, just right here, right? On the M1. But where did I pick this zone from? This level, where did I take it from? This line, this MSNR level, from the H1. So the higher time frame defines what you do. All right. So on the M1 now, because this is an H1 refined level, so I can decide to go to M15, and then from M15 I can transpose to M1. So 2 time frames below H1, M15, 2 time frames below what's it called again? 2 time frames. So this is M15 actually. So 2 time frames below M15 is M1. All right. So for M1, uh, where are you, bruh? Okay, yeah, here we go. So for M1, you enter here, you stop above this eye, and then you could roll this down, down, down. You'll be on the right, on the right, on the right, on the right. How many pips is this? To this liquidity level, it's 175 pips. Easy peasy, right? Easy peasy, right? Right, all right. The same thing with this 30 minutes entry I showed you. Note, where did I show you this entry from? The 30 minutes M30. Higher time frame is the best. So when we saw this reaction, what do you want to do on M1? On M1, you just want to wait for a proper, a valid structure level to form for you to enter in order to keep your stop very low. So I've seen this reaction, this rejection. So I'll wait for a breakout, right? There's a breakout. Then I wait for entry, right? So what will be my entry? In this instance, what do you look for? You can look for, you can enter here. This is the left shoulder of a broken HNS. I don't know if you guys know about broken HNS. So this is a broken HNS. Anywhere you see broken HNSs, they are usually the perfect place to enter. They are very scarce, but when you find them, goodness, they are gold mines. Broken HNSs, gold mines. So you could have entered there. Why? Because you want to keep your stop very low. Entered and then targeted. Where will be your target? This will be your target. This. That's over 300 pips, right? If you can hold it. If you can hold the trade. So you see that you can catch the big moves on the H1. The only reason why you go to smaller time frames is because you've seen your area of interest. You've seen your point of interest. So on the H1, price has rejected on my point of interest. So what do? I go to lower time frames in order to reduce my stop and in order to have a high strike rate. All right. Another reason why people lose or traders lose with MSNR is because of timing. All right. Timing is very important in the market. Timing is very, very important. So as a trader that is coming from ICT, I've traded ICT, I've traded Algo. Algo guys will say there's no need for time. Anytime in the market, just come, find your setup and shoot. Asia section, London section, New York, Sydney, Frankfurt, just come and shoot. ICT will say there's the London Q zone, there's the New York AM session, there's the New York PM session. They're going to say there's the London launch, there is the Asian range, there is the CBDR, the central bank dollars range, there's the float. I actually wanted to kill me, but really, timing is important. All right. So there are times you should stay away from the market. An example of those times is when price is ranging within 10 pips. There's a 10 pip range. And the only reason why you fall for traps or from ranges is because you are trading the lower time frame. All right. Imagine you're a trader You're looking for an entry at this zone in this area on the lower time frame. I bet you're going to get kicked out several times. You're going to get kicked out several times. You'll be wondering what's going on. Then probably you bought here. Maybe you bought here. Or oh, say let's say you've seen a breakout here. Oh, this is a breakout. So you're saying, oh wow, there's a breakout. Price has reacted from this engulfing. The engulfing is validated. Took this eye out. Oh, so what's next? Wait for breakout. So you waited for breakout and then you entered somewhere here for a sell and boom, price took you out. Why? Focus on the wrong thing. You're not looking at the big picture. Big elephant. There's an elephant in the room, fellas. You got to catch that elephant, man. You got to catch it. So if you're not catching the elephant, you're wasting your damn time, fellas. Your damn time. So you need to save yourself time. So when price is ranging, 10 pips high, 10 pips below, don't engage. Just wait. Go to your M30, go to your H1, H4, and find your setup. All right, unless you're very, very good, right? Unless you're very good in it. Again, I said very good. Unless you're very good. Because if you're not good, the market is going to teach you a lesson. I swear, market is going to teach you a lesson. All right. So there's a way to go about M5, M1 trading. I'm not going to talk about that yet, but to keep your strike rates very high. That's the goal, right? Trading prop firms, you want to keep your strike rate very high. You have to be careful of timing, all right? All right, there are times or there are sessions where the market is going to give you good moves. For example, when you come to the chart around 2 p.m. GMT plus 1, that's my time. 2 p.m. GMT plus 1. You come to the chart around that period, around that particular time. Oh, you're going to see a good mine. Trust me. You're going to see a gold mine. All right. For London session, when you come between 6 a.m. to around like 10 a.m. GMT plus one, you're going to meet a gold mine. You're going to see gold giving you the best setups, right? Going to give you the best setups, right? So you have to like be careful of the time. You have to watch out for the time. You can trade at any time of the day, but you have to watch it, right? You have to be sure you are following an higher time frame bias. You have to confirm your SNR levels, all right? So another reason why traders fail is because of fear. You're too scared, man. Don't be a pussy, all right? Too scared. All right. So when I started trading, there are times I would enter a trade, let's say around here, and I'm like, oh, I need to close this trade now. I need to close now. And then I close. All right. And then price goes all the way down. I'm like, fuck it. Price did 400 pips and I only profited 30 pips. So I'm angry. So now, you know what that means is that this trade, this setup you saw, very good setup. Maximize it. Maximize your good setup, such that when you have a losing trade, your good setup will buffer the loss you have from that trade. I'll say that again. Always maximize your good setup. Oh, Man City is playing. Sorry, guys. Sorry. Always maximize your good setup. When you maximize your good setup, your losing trade would not count. It won't count. So when you're entering a trade and you're using lower time frames, you're not going to be maximizing your setup. Say it's small, 65 pips, but price went up to do 400 pips, but you closed too early. Why? Why, pussy? Why are you scared? What are you scared of? Why, man? All right? Maximize your setup, okay? See, entered here. That's 48 pips. You closed already. Why? Maximize your setup, man. Maximize it. So when you take a loss, you won't feel it, all right? Because losses are normal. People will lose. Could be because last week there was a particular time last week I entered a trade. I wanted to buy. I wanted to buy gold. I think somewhere around here. I think to buy, right? So by mistake, I was loading up sell orders, loading up sell. I was wondering what's going on. Price is buying and I'm seeing a loss. What the fuck is happening? Then I saw that I was selling instead of buying. So what did I do? I had to close the trade. I went to play football because man, I can't take it anymore. So anything can make us lose in the market, anything. But the most important thing is you must prioritize your good setups. Milk your setups, milk them. Do not make things. Milk your setups. Milk them. Don't be scared. Don't be scared of your setups. If you're scared, you can break even.
Have your break-even rules. Have rules that, okay, when price does this and that, we're going to break even based on your own experience in the market. Or, okay, I'm not going to break even. I'm going to take something off. Maybe I'm going to take 75% of my profit off and leave the restaurant. So have those rules in place. If you're not maximizing your good setup, the losses are going to give you a headache. You're going to have a headache from your losses. You must maximize your good setup. All right, maximize your good setup. All right. So yeah, I think that's pretty much what I have for you guys today. Yo. So guys, it's gonna be a good week. Next week, we expect to see good volatility in the market, and then we're going to enjoy a lot of fun things together. All right. Thank you guys. Enjoy your weekend.